2017 Real Estate and Mortgage Rate Outlook. As I'm writing this in mid-December 2016, the Federal Reserve Board just hiked interest rates by 0.25% this past Wednesday. This 0.25% interest rate hike was pretty much universally anticipated and so did not come as a surprise to the financial community. What was a surprise to many was the fact that the Federal Reserve Board stated in their Wednesday meeting minutes that they anticipate to raise interest rates at least 3 times during 2017. We all know that rising interest rates are a damper to the real estate market. But usually, when interest rates first increase, like this last Wednesday's move, after a while of inactivity or decreasing rates, the residential real estate activity actually picks up. Some attribute this uptick to the fact that it motivates many potential buyers who have been considering a purchase, as well as new buyers entering the market, to get their purchase in escrow as soon as possible so they can avoid any continuing rate hikes. With the Federal Reserve actually stating that it anticipates 3 more rate hikes in 2017, I personally feel that in a month or two we're going to see some big increases in residential sales activity, at least for December 2016 through March 2017. So right now, interest rates for a 30-year fixed-rate mortgage are averaging approximately 4.16%. This was up from 4.13% last week. Now, if we go back a full year to around December 2015, the 30-year fixed-rate home mortgage was averaging 3.97%. When one looks at these rates in comparison, the recent Federal Reserve rate hike really did not have a dramatic effect on the 30-year fixed-rate home mortgage. Personally, I feel that we didn't see a dramatic increase in the 30-year home mortgage rate because the Federal Reserve move had long been anticipated and was factored in to some extent. But more importantly, I think the main factor in keeping home mortgage interest rates relatively low is the fact that the Federal Reserve has been and continues to be the major investor in home mortgages. Some say the Federal Reserve is a $1 trillion investor in the U.S. home mortgage system. I believe that as long as the Fed remains committed to investing in U.S. home mortgages, the 30-year mortgage rates may only modestly increase as the Fed increases short-term interest rates in 2017. Now, even with modest mortgage rate increases, qualifying for increased monthly mortgage payments naturally becomes more difficult, and some buyers may have to reduce their expectations because of this. If we go back to October 2016 and look at the national median home price of $268,000, assuming a 20% down payment, at today's average fixed rate, 4.16% for a 30-year loan, the average monthly increase would be approximately $86. So even with such a modest increase in the U.S. home mortgage rate, today's buyer would be shelling out over $1,000 a year more because of it. Hey, be sure to get a subscription to my YouTube channel and take a look at my site and mark it as one of your favorites. I'm sure you'll enjoy the post that I put up there.